Good afternoon. This is Brian Split with Allendale here on Thursday, August 18th with your closing commentary. We did have the grain markets trade mix today. The settlements for September corn down 4 1/4 at 4.14 1/4. December corn did settle 4 cents lower at 4.29 1/4. On the soybean side of things, we had September beans down 18 1/2. November also down 18 1/2. The settlements there were 10.16 3/4 and 10.12 1/4 respectively. We had the wheat market sharply higher today with the selling in the corn and the soybeans. September wheat up 25 1/4 today at 6.81 1/4, and the July new crop up 11 1/2 at 7.05 3/4. Some of the news in the market today, we did have really a lack of follow-through on the corn market this morning. We had an emotional open. There was a lot of buying on the open. Had some big export sales. I think these are the strongest export sales we've seen in nearly 16 years. And also with wheat up nearly 40 cents on the open this morning, there was a lot of buying. But today's high in the December contract was 437 1/2. The high from 2 weeks ago on that spike high was 438 3/4. So with the inability for this market to make a new high on that emotional opening, we did see some profit taking come and take over for the rest of the session. The funds are estimated to be long about 360,000 contracts right now. So if you take that into scope and consider what that really means, these guys could sell 100,000 contracts and still have an extremely big position in the corn market. So when you equate that to the amount of bushels, we're talking 1.8 billion bushels that the funds own, and this is just the trading funds, not your index funds. So there's a lot of potential for this market to back off if these funds want to come in here and take some profits before we have this early harvest coming. On the soybeans, really we've been stuck in a 40-cent range since the beginning of the month. If you look back, when wheat made its spike high, the high that day on Novi Beans was 10.49. The low that day was 10.11. Last week when we had our supply and demand report, the low was 10.11 1/2. Shortly after, within about 2 days, we made a high of 10.48 1/2. So 10.11 to 10.50 is really the range at this point. And we continue to fail up near 10.50, and we've seen the selling kind of take over today, actually breaking out of that range to the downside late in the session today. We could not close out of the range, so that leaves the bean bulls a hope that this market may try and retrace back up to the upper end of that range. But today's price action does make the market possibly feel a little bit more comfortable to be selling rallies at this point. Again, we continue to fail at 10.50. 10.60 is our winter high, so keep that in mind. We've got some good hedge strategies in place right now for soybeans. So if you're a little bit behind on your soybean sales and want some short-term protection through the beginning of harvest, give us a call and we'll walk you through that. Otherwise, in the wheat market, we were up sharply again at the open, made our highs very early. The September contract hit $7 on the dot. A newspaper in Russia reported that imports could be as high as 5 million metric tons for Russia next year, and that got the market excited. Now, in reality, what did we see today? Moscow did ask Kazakhstan for 300,000 tons of wheat, but there is no confirmation from the Russian Ag Minister's office that they are talking about major increases of importing wheat for next year. So at this point, it's a rumor, and we'll see how that pans out through the rest of trade. Otherwise, in some of the other markets going into livestock, we did have the cattle market sharply higher today. Cash traded 99 to 100 here. We're seeing a nice demand pull, and really, if you look at what we saw since 2008 when this economic downturn started, we saw the beef demand really come down with the stock market leveled off here, and now we're starting to see an upswing in the demand. So it looks like the consumer is starting to be on board here with beef demand. August was up $1.97. October was up $1.70 today. Both settled at 99.17. On the feeder side, we did have August up 35 at 114.05, and Sep was up $1.07 at 115.65. Over on the hogs, we've seen a nice rally here in the past couple days. There's been a sudden short-term drop in the supply, so there's a little bit of a supply hole at this point, and it's happening at the same time that we're seeing the Labor Day purchasing programs. So that's provided a nice rally to the market, but what we're looking at here is this cattle market still pointing up, but this hog market is rejecting this higher trade. So we do feel that that may be the seasonal tendency for this market to head lower coming back into the fray. that's something to keep an eye on here. And if we continue to see divergence in the meats here with cattle rallying and hogs continuing to back off here, then that's going to make that seasonal tendency look that much stronger. Otherwise, in outside markets, the stock market Dow futures trading down about 90 points at this point, with about 45 minutes left in the session here until the actual stock market closes. The S&P down about 11 points. We did have crude oil finish 99 cents lower today. Really, with crude being down, it's mainly off of the move in the equities. We had some poor jobless claims this morning. We're at a 9-month high with claims at 500,000. And we had regional manufacturing data in the Mid-Atlantic region contract unexpectedly, and this is for the first time in over a year. So that got some of the economic recovery guys a little bit spooked here, thinking that this thing continues to show signs of bogging down a little bit. The dollar up 20. There's a possible head and shoulder type bottom formation on this dollar that, if it does confirm and validate, could project up to about 86.50, which is about another 3 full points higher here on this dollar index. So we'll want to watch out for that, and that may be something that could bring a more deflationary environment towards our commodity market if it does start to happen here. So I know there's a lot going on in the global marketplace right now. Grains have their own thing going on. The economy's doing one thing. If you want to talk about it, if you have a risk out there and we're looking for ways to protect it, give us a call. You can reach us at 1-800-2-MARKET. That's 1-800-262-7538. If you want to check out our research online, www.allendale-inc.com. And as always, it's a pleasure talking to you. Good luck trading the rest of the week. Thank you.